Alright, hi there traders and welcome to the Keyzone Traders Trade of the Month for November. So this is going to be a look at a trade that we actually traded towards the end of the month, and it's just going to look at being able to understand the price action to be able to shift your bias, maybe even in the short term, even though your longer term bias may be in the opposite direction. Just being able to remain dynamic, which is really important, especially as a short term trader. So this was something that I put out in the trade idea of the day. This was something that I was looking at, some analysis that I was looking at in my academy room. You can see here, 27th of November. I said, for those of you that were in the live room yesterday, I spoke about the chance of looking for some short-term gold sell opportunities. As you can see, we have had two impulsive moves down on gold in the last couple of sessions, and we remain corrective in the pullback. So as long as this remains, we can look for sell opportunities on retests of the 26.58 to 26.64 zone. So that was something that I put out on the 27th of November, and I'm going to show you what I was actually looking at. So this is the 4-hour chart, and you can sort of see we had this really strong sell-off here after Donald Trump was elected president. We then had this rally. You can sort of see these rallies, especially when the overall market has been bullish on gold for a long time. Basically, the whole of 2024, gold has performed really, really well. But just after Donald Trump was elected, we saw this sort of like sell-off. We saw a bit of reaction, and then we started seeing this another strong sell-off. Now, if we switch down to a 15-minute chart, this second sell-off was this move here. We then had another corrective pullback, followed by a second impulsive push down, and then we've developed this sort of corrective structure in here. So with that, although the overall picture has been very bullish on gold throughout 2024, we've just started seeing some short-term price action, which would suggest that there may be a bit of a momentum shift and something that we might, certainly on our shorter-term trades, want to be able to take advantage of. So we're therefore looking at zones to be able to short the market, because we've got an impulsive push down, and then we've got this corrective sort of structure in here. You can see corrective structure is a mix of candles. You know, it's quite horizontal in shape when you draw your box around that. It's very much arranged. There's not sort of like one clear direction of the candles. It is a bit slightly sort of retracing, but you know, it's very, very sideways. When this happens, we want to look for areas to be able to short from, and the area that we had identified was 26.58 to 26.64. So if we just mark that box in there, that was the zone that we had marked as a potential sell opportunity. You can see that it had acted as resistance here. We then acted as support here. We'd acted as support a couple of times through here as well, and then we've seen this impulsive push down. Now, we know that there's liquidity here because the market has reacted cleanly from here a couple of times, both as resistance and as support. And then we've got this impulsive push through. This hasn't been retested, and we're looking for retests of this area. We're looking for corrective retests of this area here to take a continuation of the trend. We know that areas of liquidity like to be retested, so as long as that remains corrective, it stays in line with the overall context of the sort of short-term trend, and therefore that's what we look to take advantage of. So we had an entry at 26.58. Had a stop just behind there, and we just targeted back towards this sort of like high here. So it was like a 1.5 to 1 risk to reward. And as you can see, when the market played out, we literally just tagged. If you look at that, the high was 26.58 spot 1. It was just tagging these sort of lows here before it turned and went quickly into hit our profit target. So it just goes to show the importance that even though you may have a higher time frame bias, when you're shorter term trading, you need to be able to remain dynamic and look at the shorter term trend as well to be able to take advantage of those opportunities. After you've done that, the same thing is still very much what we look to do in our academy courses. Just look for the price action, look for the areas of support and resistance to identify the footprint of institutional order flow previously, and then look to position ourselves in those areas to make sure we take advantage of that. So As always, please like, subscribe to my YouTube channel, like the video. Please comment if you've got any questions. I'm more than happy to answer any questions that you have. But other than that, I hope you found this trade useful.